back time now to look at a country called Vietnam. It has 92 million people. There's a 97% literacy rate, and over the last 25 years it's achieved 6.9% GDP growth, second only to China, which is around about 10%. All its scooters are being replaced by cars. It's a compelling situation, and its food is absolutely fantastic. How do we invest in Vietnam? Should we invest in Vietnam? In the studio with me is James Gilfillan, Chief Investment Strategist at Alpha Wealth. Good evening, Vietnam, I think is what we should be saying now. I mean, what a fantastic story. You've been there recently. Is it as good as the stats suggest?
I think it's better than the stats suggest almost. You're surprised at how developed it is, and you know, you've been to Singapore and you think that you might be stepping down from that, but when you arrive in Ho Chi Minh City, you suddenly realize you almost feel like you're in Singapore, except for the fact that there are motorcycles instead of cars.
And without being too Eurocentric, it still has a very French feel, I would have thought.
It has a bit of everything, you know. It's a big coffee place, it's a good food place, and there's a lot of sophistication that you wouldn't think was there.
James, you have a very strong case for investors perhaps to be pumping their money into Vietnam. Are there any particular sectors which seem to be thriving?
Well, I think to take a step back, I think there's a sort of secular story and there's a cyclical story. The secular story relates to this strong GDP and urbanization trend that's in the country. And then the cyclical story relates to the fact that they've had high inflation. And the high inflation has been curbed, and that's come down, so the markets have dropped. The PEs are much lower than the region, so your PEs are around 13, 14, compared to many of the Asian countries, which are between 15, 18, 20, and even 30 in the case of Indonesia. So there's more of a cyclical and secular theme, and the consumer is really the place where you want to invest, because the urbanization trend is quite spectacular for the next 10 years.
James, good evening. Nice to see you again. James, just on the topic of investing, the investability of the Vietnam market. I see the Optus fund is about $30 million. Would it be fair to say that possibly the actual depth and the sort of liquidity is perhaps not quite what we would see in other parts of that eastern region?
That is absolutely correct. There's definitely, it's more of a frontier market that is emerging as opposed to an emerging market that is more developed, and so the liquidity is not as good as a result. But I think that over the next, as we know about these things, over the next 10 years, this should improve over time. So once starting the process rather than having already reached the end.
But this is the exciting part of it, of course, because we can go into that country. You can go there, as you've just been in March, and say, right, this company looks good. It's going to be listed on the exchange, or it is already listed on the exchange. It's relatively illiquid at the moment. Let's start building positions in this company. And once everybody buys into the Vietnam story, then, of course, you're looking at a 10, 15, 20 bagger.
Well, I think the point is you've got earnings growth, which is hard to find in many places. You've got PEs are reasonably low. You have reasonably sophisticated people to deal with, and markets that are quite regulated, and so you tend to find the things that you're looking for, but you've got the ability to grow, expand the PEs over time with strong earnings growth.
James, you were telling Lindsay just a moment ago that you've been to Vietnam several times, and last went on your recent visit earlier on this year. The feel on the ground when you interact with businessmen and the people and the employees at these large organizations that you happen to visit, what's the optimism like?
I think that, you know, if you look at the last 2 years, they had high inflation rates of around 20%, and the government got very strict. They raised interest rates dramatically, and there was quite a strong bust in the property market as a result. So they're emerging from this state, and actually now there's a much better attitude towards deregulation. One big thing that's happened there is FDI, which is the foreign direct investment from Samsung and Nokia and LG, has made a significant difference to the attitude, because they're putting their biggest manufacturing plants into the country, and as a result there's a certain level of optimism that has turned, and it's very palpable when you're there.
James, what industries, what sectors are available to the investor in this market, and which, for instance, would you be particularly choosing?
Well, you know, being multi-managers, we like to find specialists in the particular area. So the Optus Fund for us was an interesting one because 30% of the money is in Vietnam. There's a person on the ground actually visiting the companies, and the construction sector looks very interesting because that was obviously hard hit by the high interest rates on the one hand, and then the consumer is where there's most excitement. There are a number of retail chains that are opening up, you know, large quantities, 20% per annum in store growth, very strong momentum in the consumer side, and the average income per capita there is $1,500 a year. That compares to China, which is $6,000 a year, and you know, Singapore, which is $70,000 a year. So the excitement there is that the consumer urbanization process should enter into the picture in terms of retail sales, etc. So that looks like the most exciting sector, I think.
Somebody said to me today, James, that when you go into an emerging market, you go in either with the espresso approach or the cappuccino approach. The espresso approach is where you go directly in there and get this immediate hit because you go directly into a country like Vietnam, or you go via the cappuccino approach, which is a little bit diluted, a little bit frothy, by going through a company that has an exposure in Vietnam, like one of the electronics companies that you mentioned. What's the best way to do it at the moment?
I think it's the cappuccino approach because there's a bit of a spread. You don't get hit by one particular exposure, and you've got specialists allocating capital where it looks where the opportunities are. So I think a mixed and beginning process is much more so through a fund where they've got exposure to Vietnam rather than, let's say, through an index or through a direct share.
Gugu, you're a coffee drinker. What do you make of that?
Well, I like my cappuccino with cream, not foam. Thank you very much. And maybe that brings us to the regulatory environment when it comes to investing there. It's interesting you mentioned different funds that one can use, but what about people who are eager and actually want to get their feet on the ground and experience that field with the companies there?
So could you just repeat the question?
In other words,
the regulatory approach. Yeah, sorry, you actually repeat it, would you, Gugu?
Indeed. But thanks, Lindsay, though. The regulatory environment for those who are businessmen and optimistic, and perhaps if you mentioned the consumer environment, so if I'm an FMCG operator, if I want to set up shop there, what's the regulatory environment like there?
Well, I think that, you know, it's changing from a bit like China 10 years, 20 years ago, where they were deregulating. It's changing. So I think that the attitude is towards deregulation. It's a slow process, though, in its early days. And the point is that to start a business, there are a lot of businesses starting up, etc. There's a lot of opportunity, but it is a slow process, and it's not as efficient as what we have been used to, I think, in terms of starting new businesses.
James, for people watching the show, practically, how do they execute on this? Do we need to have funds cleared offshore South Africa available to invest, or can we invest locally too through this company you've mentioned, Optus?
Well, I think that you know, at the moment, because it's less likely for you to be able to buy direct stocks in that type of market, you're talking about funds that on the Asian world that allocate to many Asian countries, of which Vietnam might be a building block. So there are many global funds that are available. They tend to be for the high net worth individuals who are sophisticated enough to deal with the volatility and the fact that these are volatile markets and emerging markets. And so global funds are the right way to go, I think, in the starting point, rather than trying to buy a sort of share on the stock market there.
James, very finally, when CNBC Africa sends me to Vietnam, basis your analysis of the country, but I have a couple of hours off. Is it fun to go to? Is the food amazing? It's
fantastic. It's fantastic because they've got a French influence. They've got good wine. They've got very, very clean food and very interesting food, and lovely natures. The people have got fantastic natures, and it's difficult to get a meeting after 5 o'clock. People want to, want to eat out and have fun, and it's a very lively culture.
It's a tough job, but I may have to do it. James, thank you very much for your time this evening. That's James Gilfillan, who's the Chief Investment Strategist at Alpha Wealth.